What's going on? They got you dancing.
Yes, they really did. They really got me dancing.
Those were members of the Students Advocate for Tax, SAT, an initiative of the Federal Inland Revenue Service, performing at the 3rd International Tax Conference organized by the Joint Tax Board in October 2013. Brilliant performance it was, but more importantly, the message is very apt. You got to pay your tax to make our country grow. It's good to see these young ones being very, very enthusiastic about the importance of tax. On today's episode of Tax Matters, we'll be doing what is customary at this time of the year. Looking back, taking inventory, doing a review. We'll be looking at what we're able to bring to you in the year 2013. 2 episodes readily come to mind as our starting point, and those were episodes 3 and 4, on which we had Mr. Ezra Zuberu of the Federal Inland Revenue Service and Mrs. Titi Fookon of Oando PLC. At that time of the year 2013, January, February, self-assessment was becoming a mantra. It was becoming very prominent, and it was on those 2 episodes that self-assessment was really treated for the benefit of our viewers.
The concept of the self-assessment regime is a situation whereby the government no longer handles the responsibility of assessing taxpayers to tax. The government believes that, look, we want to give the taxpayers that benefit of doubt, that, look, they should be honest enough to be able to declare their income and file in all the relevant returns that they have. The government, all that they do, will check the validity of those or test the compliance to see those taxpayers, have they been honest enough in. And that's just basically the concept of self-assessment. We allow the taxpayer to assess himself to tax and files in his returns. Then the tax office does the normal process of testing the compliance level of those taxpayers.
Mrs. Titi Fookon, on her part, spoke about the challenges facing corporate taxpayers.
When we talk about the issue of withholding tax, it's clear. Everybody is used to that. It's an advance payment of income tax of the other person. There's a credit note that we get from FIRS, which we have obligation to give to the taxpayers. But for VAT, it's been a big challenge because the cost of even doing business is affected. When you're negotiating with a vendor and then he knows that you're going to deduct VAT, it's probably telling you, no, whatever I'm paying you is net of tax, because I know you guys are going to deduct VAT and then I will not have that VAT to offset. But what I have personally been doing is to educate them, because there's need for education. There is no credit note to give for VAT deduction at source. So the only evidence I have is your invoice, your payment advice, showing that deduction of VAT and withholding tax has been made. These issues have been flagged with FIRS at different fora, even during workshop. The review of VAT workshop that was done, we actually had to tell FIRS that it would be better when the VAT law is being amended, that section for oil and gas should be removed, because it's like an additional burden. You are trying to get over withholding tax. You are also now trying to get over VAT remittance on behalf of the vendor. But there is no let's say credit note or something or evidence to give to the other taxpayer. And most times when they have audits from FIRS, the FIRS says, okay, where is evidence that you remitted VAT? And the vendor says, but my VAT was returned by the other party. And they run back to us and say, we want you to give us something to show that you've deducted VAT at source. And that's been a bit of a challenge.
The normal thing is that I believe as they pay these taxpayers, they give the taxpayer a payment advice. And on a monthly basis, these taxpayers are expected to also file a VAT form. Every taxpayer is required to file a VAT return every month, whether there is transaction or not, whether there's business or not. And there is a provision really in respect of the output concerning the transactions they made for that period under review. There's also a provision for tax suffered at source. And as a matter of fact, when you go in that very form, there's also an additional provision in which the taxpayer is supposed to deduct the amount that was withheld, the VAT that was withheld at source, be it an oil company, be it a government agency, or any authorized agency that is mandated to withhold the VAT. Now, if you're filing that return, all that you need as a taxpayer to do, please attach a copy of the payment advice along with the VAT form. Once you do that, it will be very clear, and the tax authority will know that this tax that was deducted as source was possibly deducted by or withheld by Oando. And I also want to say this for taxpayers. You don't suffer the burden for payment of VAT. When you're rendering the service, factor your VAT element, the 5%, in your invoice, because the VAT in Nigeria is invoice based. Now, some of us avoid that, but actually we're only undoing ourselves, because these agencies and these companies that have been mandated to withhold VAT, if you do not add that VAT element, they will presume that it's inclusive. Whatever you've quoted is inclusive. So they will deduct, they'll still go ahead to deduct anyway. So please take note, each time you are giving an invoice, state the VAT element separately so that they will know. There is really no credit note as is obtainable in respect of the withholding taxes. But that invoice and then the provision in which the taxpayer is to be filing returns on a monthly basis suffices for the FIRS.
On episode 9, we had the duo of Chiaka Okoye and Nathan Jamea, both of the Federal Revenue Service, coming to talk to our viewers about the game plan, about the plans of the FIRS for the year 2013.
We understand that you have a medium-term plan 2012 to 2015. What elements of your vision 2020 have you extracted into the medium-term plan?
Yeah, basically the medium-term plan is to help actualize our vision.
Okay.
So in the area of policy, we set out to develop a national tax policy. And the policy is supposed to address this area that we talked about, issue of multiple taxation, issue of where to put the focus, either on direct or indirect taxation. In the area of legislation, of course, some of the policies will require legislation. So part of our medium-term plan is to ensure that we have such a legislation in place, and also review some of our laws too to make them very relevant, and to support our focus on indirect taxation. In the area of tax administration, we want to, of course, our number one concern is to attain as much revenue as possible to enable government to execute its programs, and also to ensure that our taxpayers pay their taxes comfortably. So we want to really encourage the idea of self-assessment. In fact, regulations have been developed already to improve this idea of self-assessment, so that a taxpayer will assess himself based on his income, and that way it is voluntarily done. So we believe this is going to help in the payment of tax.
Madam, let's talk about modernizing the system. You are in charge of modernization, project management, non-tax. How is the modernization plan going?
Let me even look at what we have done in 2012 and how we are taking that on to 2013. In terms of taxpayer service and service delivery and making and having an efficient tax system in Nigeria, the service went on to create the taxpayer service last year, which is dedicated to providing, three main areas: sensitizing the taxpayer, creating awareness of all our processes, educating the taxpayer, and most importantly, supporting the taxpayer. In terms of supporting the taxpayer, we have created business support system under the taxpayer service, where we begin to engage the taxpayers, the small and medium taxpayers or enterprises, and assisting them or giving them support in how they can maintain their records. The issue of maintaining records, which typically, comes into play when, in very rare instances that we have the need to audit. So we're beginning to engage one-on-one with the small and medium taxpayers to teach them, educate them how they can begin to maintain good records, not just for themselves, but also for tax purposes. We're moving from enforcement to really voluntary compliance, where we're letting people, be good citizens and then know the importance of paying their taxes. So with that voluntary compliance, we've also developed what we call the tax calendar, where there is no tax person breathing down, or coming to you to say your due date is there. So you already know, the due dates of the different types of taxes that is expected for you to file your returns. We also have the tax diary. We also have a tax calculator where you can go on the internet and then enter all those,
Really?
Yes.
In the same vein, talking about the FRS game plan for the year 2013. The 2013 Corporate Plan Retreat and Enlarged Management Meeting was held in Abuja on the 25th and 26th of February 2013. And we brought you that story in our episode 10. In his opening remarks, Acting Executive Chairman of the FRS, Alhaji Kabiru Mashi, gave a scorecard of the service collection performance in 2012.
Ordinarily, I would have loved to stand here and eulogize about the FRS and the staff for a landmark performance in 2012, achieving the highest cumulative tax collected in the history of the service, over 5 trillion. That was a good performance. We could have done better.
Alhaji Kabiru Mashi also set the agenda for the year 2013.
On our new performance contract, we're on the verge of agreeing with the Minister of Finance on the FRS key performance indicators as follows. 1. Increase collection of non-oil revenue by at least 20%. That is in 2013. 2. Reduce preceding year tax arrears figure by at least 25%. 3. Conduct at least 3 public enlightenment programs for key stakeholders in every quarter. 4. Achieve a tax revenue to GDP ratio of 10% by end of the year. 5. Achieve at least 25% increase in filing compliance level by non-compliant corporate entities. This contract will shape our corporate direction in 2013.
Alhaji Mashi made things clearer in an interview.
This year, the target given to us is 4.6 trillion naira. But all things being equal, inshallah, we have set ourselves a target of 5.6 trillion naira.
Real agenda setting there.
Yes, indeed. I also remember vividly. One major feature on that episode was the lecture of Mr. Niyo Rebajo of the FRS to travel agents and tour operators.
We have discovered that the major area of conflict is in the cash flow. Recognizing what in the cash flow constitutes income. It is income that is taxed either for VAT or income tax. And income is not necessarily cash flow. Part of cash flow can be income. What do we mean by cash flow? Cash flow is all the monies that enters into the hand of a business. It is not all the monies that enters into your accounts that is your income. So the major issue now is what is income, or what we call revenue. We have identified 3 major cash flows. That is cash inflow now. We are not concerned with the cash coming out. We are concerned with the cash coming in. There may be many, but we have 3 major ones. Receipts from sales of air tickets on behalf of airlines. It is a cash flow that has come into the company. But does it constitute the income of the travel agency? No. In many cases, in our offices, because of the way your accounts are sometimes presented, our office will read it as an income for you. It is a cause of conflict. The second one is commission earned on sales of air tickets. When you sell a ticket to a customer, what you have discovered is that your hold on that ticket is the commission accruable to you. Then the third major item is receipts from Hajj/tour operations. These are the three major cash flows. But the commission you earn normally comes within the ticket sales. And there are three ways your airline will treat the commission. One, you might already meet the total amount collected to the airline, and the airline will now give you another check for your commission. I don't know. Two, you might deduct your commission upfront. Either of these two ways, what matters to government is you have earned income from commission. And the law says that every commission earned is an income, which must be taxed for income taxes. The law also goes on to say that for some businesses, when you are earning commission, two things must happen. And those two things are withholding taxes and VAT. Now, withholding tax first. The law says anybody that is being paid commission, something must be deducted by the payer and remitted to government as advance payment of tax of the payee, and that is withholding tax. Usually, it is corporate organizations that are mandated as agents of government to deduct. For withholding tax on commission is 10%. So if you are to collect 80,000 naira from your airline, they are mandated to deduct 8,000 naira and remit and give a check for 72,000 naira. But they must also give you a piece of paper to show that they have deducted 8,000. That piece of paper and the check they pay to you is your own turnover or your income. Why do you need it? The reason you need it is that at the end of the year, when you compute your returns and you file with government, if your tax liability is so much, you can use the withholding tax already deducted to offset partially or fully your tax liability.
Yeah, okay. Yeah, wetin be this?
The deduction now for withholding tax.
Withholding guinea. Look, if una no pay me my correct money today, hey, munu get me half for.
But madam, should be your company paying income tax.
Yes, that one na enough load for me to carry. Why una wan come add join am again?
You see, withholding tax now advance payment for income tax. So when you do some kind job like contract, we go remove small from am when we won't pay you.
And una go contract am up. No. Abeg tell me another.
No. We must pay the money to FIRS within 30 days, and they go give us withholding tax credit note to take show say you don't pay part of your income tax in advance.
So
now to help make the money where you go pay at the end of the year small.
So this withholding tax something, it be like part payment of no.
Exactly, madam.
I beg you, give me my check.
Remember, come collect your credit note.
Withholding tax now for we own good. FIRS, it pays to pay your tax.
Now, what about VAT? You must charge the airline VAT on your commission. They will tell you your commission is VAT inclusive. No. That is why the government said every business must have a VAT invoice. In your invoice, you will show the amount of your service, commission as also percentage, VAT on that at 5%. Then the total amount they should render to you. So if your commission is 100,000 naira, the VAT of 5% of 100,000 is 5,000. Your airline must pay you 105,000.
Welcome back. So much for looking back on the year 2013, at least on this episode. We have only been able to look at 1/5 of what we have to look at because we are talking about 50 to 52 episodes in a year. So this review continues next episode. What we want to do now is to bring you the story of the last in the series of operational meetings of the Field Operations Group of the FRS held for the year 2013. Typically, such meetings are rotated around the country, around the regions into which the FRS has been divided for ease of operations and for a review to be done of the activities of those different regions. On Thursday, the 5th of December 2013, Calabar Cross River State played host to the last of such meetings for the year 2013.
Yes, this is actually very appropriate as we'll be able to compare the performance of the service so far with the target which Alhaji Kabiru Mashi set out a few minutes ago on the program.
Mr. Ajayi Bamidele is the coordinating director in charge of the Field Operations Group at the Federal Inland Revenue Service. According to Mr. Bamidele, out of a target of 4.6 trillion naira set by the federal government for the FRS for the year 2013, between January and October, the FRS had collected 4.19 trillion.
As at the end of the October 2013, our achievement profile has indicated that we have achieved about 104% of FRS target. In precise terms, revenue collection as at October 2013 stands as follows. What we have collected is 4.159 trillion. The non-oil collection performance of 160 billion for the month of October indicated an increase from the 149 billion collected in the month of September. This increase indicates that we are likely to meet our non-oil target for the year if we are able to sustain the tempo.
With figures for November and December still awaited, it is obvious that the FIRS is well on its way to surpassing the target of the federal government and perhaps overshooting its own set target. I recall that in the year 2012, for the first time ever, the FIRS collected taxes in excess of 5 trillion naira. What is left but to wish the FIRS, the entire members of staff of the FIRS, the best in the remaining days of the year 2013. We do hope that the figures for November and December will put smiles on the faces of all Nigerians. It's time to go. I want to leave you once again in the hands of members of the Students Advocates for Tax. From Christina,
Merry Christmas and prosperous New Year in advance.
From me also, a Merry Christmas and a prosperous 2014. Bye for now.
Everybody pay your time.